Hey guys, welcome to this week's Money and Investing Show where we are tackling the buzzword of sector rotation. What does it mean? How do you use it as an investing tool? And how can you sharpen the knife to become an expert at making sure that you're going with the flow rather than pushing against it? See you in the show. Hey guys, welcome to this week's Money and Investing Show with me, your host Andrew Baxter, and as always, my rather resplendently dressed offsider, Mr. Mitch Olorenshaw.
I can say the same about you, Mr. B. Thanks very much for having me on the show. And the topic we're going to cover today is something that's really quite relevant amidst sort of the end of the coronavirus pandemic, new vaccines coming out, everyone feeling much more hopeful again, and that is sector rotation, out of one sector into another.
Indeed, it's the buzzword at the moment, and virtually any broadcast, newspaper, article that you read is indeed talking about that subject of sector rotation, which is an incredibly important thing to understand, but quite tricky to do.
Absolutely. I guess the first question to start us off is, what is it? What is sector rotation?
Okay, so the easiest way to think about the market or the stock market as a whole, imagine you've got a whole cake, like a gatto or a birthday cake or something like that, and it can be cut into various segments. And as an investor, it's nice to have exposure to all of it, but chances are you're going to have exposure to portions of that. So for example, you might have positions in the banks or resources, but you may not have positions in pharmaceuticals or travel or technology, as an example. And news flow and fundamentals start to drive where the best place in terms of overall return or risk-adjusted return is for you. So you might say, look, the banks are running really hot right now, not that they are. That's the place I should have my money. And sector rotation would be where there's a big wave of money in the market, then going into the banking sector.
So is that, for example, why we've seen such an increase in the NASDAQ index this year? Is because traders have rotated out of your typically, say, economically sensitive stocks into technology stocks as a sector?
Exactly right. So with something like the global pandemic that we've seen, stocks in the technology sector have been very well equipped for online selling.
Stay at home.
Yeah, no one can move around, no one's going to shops, it's not safe to do so apparently, so buy it online. And so, your typical stores like Amazon, in fact, here's a good one for you, Booktopia, wonderful Australian story. Booktopia. So if you want to buy books in Australia, get them from Booktopia. They were actually looking to list before Christmas on the ASX, they're going to be listing in the new year. Brilliant little business. Not so little these days either. So there's a local competitor to Amazon.
Nice.
We digress. Nice plug for them. I wonder if they'll send us some books for free.
I know you're a bookworm too,
I
right?
certainly am. So stocks like Amazon and Netflix, Zoom for conferencing, all of those stocks have performed particularly well because it's been the place in markets. People are at home, they need something to do, and they need conferencing and all that. So they've run really, really well. Big flow of money in there. Very stretched valuations for those people that are fundamentalists. You sort of think, how can Amazon be on a couple of 100 times earnings with a projected growth of 30% a year? So they don't comply with the norms of most fundamental investing, but certainly huge money flows into those sectors during these difficult times. And I guess that sector rotation we're now seeing is, have they had their run? And if so, where is the money going? And what's been the catalyst for it?
Sure. I guess amongst the news flow that we've seen most recently, it's kind of been out of tech and then into more economically sensitive stocks. And Pfizer comes out, they've got a vaccine, 90% effective, everyone's happy, the economy's back open. And I guess that stresses the importance of rotating from one sector to another. So I want to ask, why do you put such an emphasis on choosing the right sector and then rotating amongst those?
I want you to think about an example of riding a push bike, which some people would have had the experience of, some others maybe not. But riding into a headwind is really difficult. I remember cycling to and from school when I was a kid, and you're battling against this really strong wet weather in the UK.
Pain in the neck.
And it's really hard work versus having a tailwind pushing you home. One's easy, one's difficult. And when it comes to investing, it's exactly the same. You want stuff that's got a tailwind that's going to push you along. Much easier to go with the flow than sort of be hand-to-hand combat going against the flow. So that money flow in the market and rolling with it is actually an easier way to be making money because you're in a space that's moving in a positive direction before you start. You don't have to be a great stock picker. If you're in the right sector, it's going to go well.
And to stop you there, AB, just on that, does that really come down primarily to your fundamental analysis as to which sectors you're going to be investing in?
I think that's a huge factor, and it's not easy. You're not going to sit at home with the Ouija board and go, okay, which sector is going to be the one where the money's flowing into? So you've got to be very minded on what's going on in the news flow. And if we take the example of Pfizer coming out with a 90% success rate in their anti-COVID vaccination, that's huge news. And the pharmaceutical sector in particular has been one, if you talk of sector rotation, as there's been talk of a possible cure, companies like AstraZeneca, obviously Pfizer,
BioNTech, Moderna,
Baxter, Moderna, Bausch, loads of other different businesses in that space have all sort of had a CSL in Australia. They've all had a sort of finger in the pie of there's a virus cure coming. So that sector has already had some level of interest in it, pure sector rotation. What we're seeing as the announcement from Pfizer's come out is that, okay, the world's going back to normal. How good's that? And literally within a day, the market had factored in that normal service has been resumed. You and I both know, whether Pfizer's vaccination is going to be that at 90% effective.
We don't know.
I'm a little sketchy on that right now, but we'll see as time goes by. But does it have such a dramatic and instant impact on markets? And money flow these days is quick because of the volume of information that's out there. It's easy for people to get exposure to it, to see what's going on. So, all of a sudden Pfizer come out with their announcement, and the money flow starts to go, as you say, back into those economically sensitive stocks, and it's got to flow from somewhere. It's not new money. Someone's not just printed, well, maybe the Federal Reserve have printed more money, but the money has to come from somewhere. And that place is out of one sector and into another. And what we've seen is a bit of an unload in the technology sector in particular, because they had pretty full valuations by any metric. They've also been the darling of the market during the COVID crisis, and that sort of burner has been turned down from raging heat to maybe just simmer. And so there's a lot of money that's flown out of that into other sectors. And some of those sectors and stocks are quite logical, and some maybe less so. So, if you think about travel, all of a sudden you're likely to be able to travel. So stocks like Qantas, Sydney Airport both enjoyed a really good pop in the domestic market. But taking that thread a little bit further out, Rolls-Royce, you normally associate being cars, but actually Rolls-Royce business is in aero engines and maintenance of aero engines. That's really the guts of where the revenue is. All of a sudden, if people are flying, there's going to be a need to service aircraft before they go into the air, and there's more demand pent up again for new aircraft to be added to fleet. So Rolls-Royce actually jumped by 40% in one trading session. I was back in London. I'm traded for years, RR, over in London, old favourite, and bang, 40% jump literally overnight, which is astounding. But then, it's also probably halved in value over the last 9 to 10 months as well. So it's had a little bit of pain. 40% jump, nicely on its way to recover for its investors.
Sure.
So that's a bit more of an obscure one. Travel and tourism, certainly a big one. Some of the companies that have done, especially well, we talked about Harvey Norman and Kogan and Afterpay would be some of the companies that we've talked of extensively this year that have performed very well. They had really quite significant sell-offs as money's flown out of those into the next thing. Which is more than understandable. Again, Temple Webster, all of those sorts of companies that have done very, very well in the online selling space. It's almost like someone's just held up a red card, go, that's the end of the rally, now the money's got to go somewhere else. Now, that's not really how it's going to be, but that's how fickle this market is.
And that's the question I want to ask. I'm going to throw a curveball at you here. How do you not get caught up trading headline to headline? And we did a podcast on that. If any of our viewers haven't watched that, go and watch it, because all of a sudden the money's gone from one place to another in a day. It's a pretty quick turnaround.
Yeah.
Very easy to get caught up in the whole rage of the headline and the news. How do you decipher between what's actually really good fundamental analysis on a sector versus a headline?
Good question, and look, the sheer volume of money that's gone through the market isn't just mum and dad investors following the headlines. It's meaty, big insto cash
hedge funds
that's been moving around in there. That's why the moves have been as dramatic as they have. And it is very tricky not to get bounced from headline to headline. It takes a level of fortitude to sort of join the dots between what you hear in the news and then what's going on in reality. One of the tools that I've used in the past, and it's actually a very, very useful tool for. Let's go back to 1999, if we can dust off the black and white TV. So what are we, 21 years ago?
Blow that dust off.
On parchment, actually probably written in stone. One of the indicators I used really well at that particular juncture, and we talked, I think, about technology a little while ago, was trading a lot of companies that were sort of pushing into the technology space because the sector rotation back then was back into technology.
Sure.
Nothing cutting edge. We're talking about 20 years ago. Most people are aware of this, 21 years ago. So, small mining companies were really emerging as listed entities with the .com after their name, and all of a sudden their share price went through the roof. So one of the tools that we use very, very effectively there is something called on-balance volume, OBV as it's called in the game. And what that effectively looks at is the volume for the day and whether it's buying pressure or selling pressure.
Okay.
Now, if it's a positive candle and the market's moved up that day, it'll assume all buying pressure. It's a little bit misleading, but nonetheless, that's what it assumes. And if the candle is red and it's a down day, it'll assume it's all selling pressure. And what you're effectively looking for, you can start to see if you chart it, I'll put it in a slightly different way. Imagine you've got a pot on top of the stove,
Okay.
and it's got a lid on, and it's just the gas is turned on and it's just warming up. After you turn that gas up a little bit more, it's going to be raging and the lid of the pot's going to pop off. That's exactly what on-balance volume is looking for, is that change in temperature to the point where the lid pops off.
Okay.
And using OBV or on-balance volume in this instance is quite a good leading indicator to see the build-up in those sectors. It didn't just happen overnight. There's big money moving around the market. It doesn't happen in one day. But that's where the sort of the disclosure, if you will, the obviousness of it has really come out. So that's always a useful indicator. If you're using a platform like IB, which is our preferred, Trader Workstation is our preferred platform, what you're looking for is an increase in the volume of green volume bars, effectively, because it's color-coded volume, does the same thing. Very, very useful tool.
Sure.
Obvious as anything when you think about it.
Yeah, it does make total sense. You're absolutely right, and that's part of that technical analysis which we teach our clients. I guess that final question is, this all sounds really good, but it can't be that easy. So how do you get exposure for our clients out there or our listeners to particular sectors that you like? Is it ETFs or is it particular stocks? Is it a mix?
In the Aussie market, ETFs are pretty hard. You might have an index tracker in the Aussie market, and let's face it, the broader market has been performing pretty well. We're back up to February highs, in a matter of days.
Crazy.
It's really had a good pop. And again, this is going from day to night. There's a vaccine, boom, the world's changed. It hasn't. It's going to take time to filter through. Maybe it works, maybe it doesn't. Are there enough shots to go around, given the fact you've got to have two, the list goes on. So how do you position yourself well? You've got to look at what's been flogged and not loved. We look at stocks like Brambles, Amcor, the transport sector, Sydney Airport, tremendous growth story there, laden with a lot of debt, admittedly, but no foot traffic right now, so it's not surprising it's had such a tough run. So these are very unloved stocks. Qantas, another one.
Flight Centre,
Hello World, all of those stocks that are in that sort of space. No one's wanted to touch them with a barge pole for a number of months, so they're very cheap. Oversold, but oversold for a reason, because there's been no real fundamental reason for them to be doing anything other than that.
Sure.
All of a sudden the focus is back on them, they're cheap, so that's why you've seen that pop through. So how do you get ahead of that? It's very hard because it's already happened. How do you avoid sector rotation? I'd be avoiding export sensitive stocks, that's for sure, with the dispute that we've got with China running and getting worse. The technology sector had quite a self-afterpay, got clobbered but sort of recovered.
Back to nearly $100 now.
So, that's one that you can't really keep down. You've got every friend you've ever met standing on the lid of that one trying to hold it down, and it's still moving higher.
And it wouldn't be a podcast if we didn't mention it either, would it?
Probably almost mention it almost too much. We'll see if we get one more plug in as we go. So what's your on-balance volume? How many times you mention it? But that sort of stock is likely because there's a strong fundamental story. It's not just about shopping online with that. It's also bricks and mortar as well. So as we see people moving back into shopping centres and physical shops, you may well see the story continues again there. It's not just online, it's got a broad base. So that's kind of why that one. Look at shopping centres, Westfield, for example, and some of the big leasing companies that really have been on their knees over the last sort of 7-8 months, where they haven't had tenants paying rent, and where they've had very little foot traffic for their existing tenants, and they're oversold, those businesses. And so as you start to see people moving around, you're going to see those sectors kick off. Energy is another one, which we didn't touch on. Look at stocks like Oil Search, which has been just like an unloved stepchild for the last 7-8 months. It's come down from over $6 down to $2.60, I think, at one point in time, and all of a sudden it's up at $3.45 in 2 trading sessions. And again, part of the reason for this, Mitch, if people start moving around, they can use more fuel. One of the areas we haven't seen is airline international travel, which is a huge consumer of aviation fuel, obviously, and so those oil companies have had quite a surge on the back of that. Be interested to see long term what happens as President-elect Biden gets in and starts to scale back the use of carbon energy for getting us around. But that, I think, is not going to be affecting our market today. That's something we can perhaps look forward to over the coming years.
Yeah, certainly agree on that. It's definitely tough to pick fundamentally which sector you want to play. So let's get a little bit more of a practical example as we conclude the end of the broadcast, AB. What kind of sectors are you trading at the moment? What do you prefer? What are you going out of? Where's your head lying at the moment?
Look, I washed out of quite a number of positions in the energy space on that recovery, purely and simply because I want to free that cash up and put it into a couple of things. So by and large, where I'm at the moment, rather than just simply playing sector rotation. I've got spreads running on the index, which is my standard play in the form of condor. I'm not worried about individual stocks, I'm just looking at the index levels there, which is broken up, and that's working quite nicely. There are a couple that I've got under my belt that I'm not going to disclose right now. I might keep those in
You've intrigued me.
I might keep you on your toes with that one and share those another time. I think the mistake a lot of people make would be to go playing back into the banks right now, even though we've got strong consumer sentiment. I think we're likely to see retail being the place. It has been certainly through COVID, and I think bricks and mortar retail is coming from very, very modest levels, and that ability for people to get out of the house, particularly those of our friends and colleagues and brothers and sisters down in Danistan down there in Victoria.
Danistan, Victoria.
Being able to get out of the house and actually experience the joys of shopping rather than waiting for a parcel to turn up at your house. I think we're going to see quite a click along in face-to-face bricks and mortar retail. The likes of JB Hi-Fi, which has done very well through the COVID time. Harvey Norman, as always. But also maybe some of those clothing retailers that have done it very tough. We've seen the Aussie retail landscape really get decimated with bankruptcies and the like in the clothing space in particular. And I think we might see a little bit of a surge in that in the immediate run up to Christmas as well.
There you go, you heard it here first. Quick question to finish on that, AB. What's your view on the resources sector here on the ASX? Because that's kind of been a pretty big part of our market. Take Fortescue Metals, it's gone from nearly $8 up to $17.50 just a couple of days ago.
Look, I watched out of Fortescue up at the mid-17s a few days ago. It's at $16.50 or so at the moment. I felt that was the run for the moment, and I do believe that the tensions of trade, particularly with China, are going to grow, irrespective of vaccinations for corona. And this is something you mentioned earlier, the dangers of trading headline to headline. That whole trade war thing, unless you're involved in an industry that's quite exposed to it, is probably almost a forgotten story. US election, COVID cure, economy's booming, consumer confidence is there, house prices are flying, markets almost back to record highs. What trade war was that we were talking about?
Yeah.
And that isn't going away. China most certainly isn't going away. And I think a lot of stocks that are very exposed to that, and companies like Treasury Wines have been absolutely belted. The coal sector is going to struggle on the back. We've seen our agricultural sector struggle on it. We've seen our universities struggle on it. We've seen our property market struggle in terms of overseas buyers in there. And thus far, through the early part of COVID, our miners, particularly the likes of Fortescue with that iron ore production, did very, very well as we saw iron ore prices move up. China's playing the long game there. And I think they've got a mine in Guinea in East Africa, or West Africa, I beg your pardon, which they've put in an enormous amount of funding. It's a mine they effectively own, and when that comes on tap, or Vale in Brazil gets its COVID under control and can start exporting again, that's where a lot of weakness is going to come in for a company like Fortescue, which has had such an incredible run, and it'll be a crying shame. It's a pure, beautiful Australian success story, but it is vulnerable because it does one thing, which is part of its beauty, but it's also a poison chalice, and that's the fact that its biggest market is not best friends with us anymore. The good thing that Fortescue's got going for it is its chairman, colourful, charismatic man that he is, and what an amazing success story now. Andrew Forrest has got an incredibly strong relationship with China, and if someone is going to be able to tiptoe through the difficulties of a trade war in the iron ore sector, Twiggy is your man.
Said like a true fundamentalist. Thank you, Mr. B. Look, we are at the end of the broadcast. A lot of great information in there, and it really is quite insightful how you can start to play this to actually become quite profitable from just simply knowing the fundamentals behind sectors. What are your final words to conclude the broadcast?
This isn't stuff that you can learn overnight. It's something you really need to learn by osmosis, and we say this to our clients all the time. The more time you spend around this, the more you can understand the nuances and intricacies of how the world of economics and the jigsaw puzzle of this comes together. But if you can understand that headwind versus tailwind as a starting point, and understand the pure concept of what we're trying to do is find sectors that have got that tailwind pushing them along, that's going to make the job of making money a lot easier. So get that right where there's movement in the sector, and then find the player you want in the sector, as opposed to just trying to find an individual stock and then create a story around why it may or may not work.
Great advice. Thanks very much, Mr. B. Absolute pleasure. Cheers.
Pleasure as always, Mitch. There you have it, guys. Make sure you give us a like and put some comments in the box below. More importantly, hit the notifications button so you can find out what's coming up next, and we'll look forward to sharing the message with you.